Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the financial world and sometimes pull a few skeletons out of the corporate closet. Today we are diving into what Aebi Schmidt Holding AG is telling us about their business. Aebi Schmidt Holding AG is a company that makes equipment for things like municipal services and agriculture. Think snowblowers for airports, sweepers for cities, and tractors for farms. They are a global player, and like many companies these days, are filing reports with the Securities and Exchange Commission in the United States to keep investors informed. This is pretty straightforward. On the 13th of November 2025, Aebi Schmidt Holding AG released some important news, and this filing is essentially packaging that news for the public record. The most interesting part of this filing is usually the financial performance update. Companies use these reports to share how they are doing financially, and we are going to sift through that to see the real story. Aebi Schmidt Holding AG has common stock traded on the Nasdaq stock market LLC under the symbol AB. This means everyday investors can buy and sell shares of the company. When we look at their financial reports, we are essentially looking at how well the business is performing for these shareholders. Now here is an interesting tidbit. Aebi Schmidt Holding AG is identifying itself as an emerging growth company. Think of this as a designation for companies that are still relatively young or small compared to the giants in their industry. This often means they can use some relaxed rules for financial reporting, like a longer runway to adopt new accounting standards. And in this case, they are indeed electing to use that extended transition period, meaning they are not jumping on board with the newest accounting rules just yet. This section, item 2.02, is all about the company's financial results and overall condition. It is essentially pointing us to the main event, the press release that contains the financial updates. The filing itself does not present the detailed numbers here, but refers us to an exhibit. So, what did the press release say? This is where we get to the heart of the matter. The company is reporting on their financial performance, and we want to see if the business is growing, shrinking, or staying flat. Are their sales going up or down? Are they making more or less profit? These are the questions we aim to answer. If they were to present detailed financial tables, we would be looking for things like revenue, which is the total money they brought in from selling their products. We would also examine their net income, often called profit, which is what is left after all expenses are paid. Trends in these numbers over time are crucial. For example, if revenue from their municipal division is declining significantly, it might suggest that cities are spending less on things like street sweeping, which could be due to budget cuts or a shift in priorities. Conversely, strong growth in their agricultural equipment sales might indicate a robust farm economy or successful new product launches. We also want to see how much debt the company has. Too much debt can be risky, especially if the company's earnings falter, making it harder to make payments. For a company like Aebi Schmidt, which sells equipment that can be quite expensive, understanding their sales cycles and customer financing is key to interpreting their financial health. Are they seeing a lot of large orders, or is it a steady stream of smaller ones? This provides context for the numbers. You might also hear about something called XBRL. It is basically a digital language that companies use to tag their financial data, making it easier for computers and people to read and analyze the information. This filing includes that data, which can be very helpful for a quick overview and for more in-depth analysis. Okay? Now let's look at the broader picture based on what this filing suggests. Aebi Schmidt Holding AG is operating in sectors that are very sensitive to economic conditions, when municipalities have tight budgets or when farmers are facing lower commodity prices. Sales of their specialized equipment can be impacted, therefore understanding their geographic diversification and the specific industries they serve is vital. For instance, if they are heavily reliant on European municipal markets, a slowdown there could disproportionately affect their results. The fact that they are identifying as an emerging growth company and using extended transition periods for accounting standards might suggest they are still in a growth phase, or perhaps managing complexity. It is not inherently bad, but it means we need to pay close attention to how their financial reporting evolves over time. In conclusion, this filing from Aebi Schmidt Holding AG, while referring us to an external press release for the specifics, is a standard update for investors. What we would really want to dig into are the actual financial figures in that press release. Without those numbers, it is hard to definitively say if the company is on a strong upward trajectory or facing headwinds. For Aebi Schmidt, the story in the coming months will likely be about how effectively they can navigate economic cycles and continue to innovate in their specialized markets. Alright, that is our rundown of what this Aebi Schmidt Holding AG filing is all about. What are your thoughts on companies designating themselves as emerging growth companies and the implications for investors? Let us know in the comments below. If this breakdown was helpful, please give it a thumbs up and subscribe for more corporate financial deconstructions. And don't forget to join our Discord community. The link is in the description. Thanks for watching, and we will see you on the next one.